Good afternoon, dear marathon participants. Today we start our fourth week of our marathon with LH Crypto, and we are here. We are glad to see you all here. I'm Alice.
And I'm Tony.
So, first of all, let's summarize the results of the last week, Tony, and which are the most important events and news of the last week which influenced the market.
Sure. Well, hello everyone. So today, as you guys know, that's our fourth week of the marathon. So let's have a look at what happened last week. So in terms of the actual results, I'll be honest with you, I didn't really have a huge amount of free time to trade in this account. Nevertheless, so basically what we opened last week, it was one on Bitcoin. And again, we probably could have waited, but I decided to, just to close it down. So that's one of the losses that we actually see, because as you guys remember, before that we had one minor loss on Bitcoin in the very, very beginning. And again, you can probably say I don't really have the patience it takes to, sit with the Bitcoin. But anyway, that's basically one of the losses. And again, something I say every single time: do not be, discouraged by, seeing something with a minus in front of it. That's absolutely normal. Losses, they do happen to every single trader. But yeah, that's basically the situation with Bitcoin. And actually, one of the reasons I decided to, close it down. If we do have a look at the graph, it's very, very, very flat. We do have occasional, breakthroughs like this, but generally speaking, it's relatively flat. So I just decided, not to take up that, margin that we can use elsewhere, and just decided to close it down. Anyway, so in terms of the British pound, something that, something that I mentioned last week. It was most likely, to go up. If you guys do remember, I was saying that, in the event, let me just open the graph real quick. In the event, if it does actually go down, and it was actually in the minus, it was in the red for quite a while. But in the event they actually went down quite a lot, I would actually hedge it. But the resistance levels, excuse me. And the resistance and support levels, they were quite clear. So for any one of you guys, wondering why didn't place either stop loss or why didn't actually hedge, you guys can actually have a look, the previous video where we did the whole resistance and support levels, etc., etc. So that was actually a bit of a plus. And then in terms of the gold. So basically what happened, if you guys do remember, we had two different deals on gold opened at the same time. One was for a little bit longer term, the other one was a little for shorter term. Just to for the clarity of this experiment, let's put it this way: I decided not to place a stop loss, and decided to wait for a little bit, and eventually I actually had to close it down. But basically what we did have is one, the long position, that would actually close quite quickly. And in terms of the short position, we still could have had it, and it would have gotten back eventually. But again, I decided to close it down. But I did, if you guys do have a look here, increase the volume a little bit here. And actually went along and added a little more on gold as well to make up for the previous losses. So in the end, we did make a little bit last week. It's not like 40%, anything crazy like that. But if we do have a look on the account overall, if you guys do remember, we started off, and let me just make it clear for everyone. We did start with 2 Bitcoins, and our profit is 0.81 Bitcoins right now. So again, if we look at the dollar side of it, it's about 4, yeah, well, more than, yeah, a little more than that.
40%,
yeah,
more than 40%.
Yeah, a little bit. Yeah. So in the end, considering this is our last, the end of the marathon, basically, that's the last video we're doing in terms of the marathon. To sort of sum it up, we did make about 40% in 4 weeks' time, which is not bad. Especially considering that I wasn't really trading and focusing so much. I wasn't trading on this account every single day. That's not my main one, but that's not bad, I guess.
And
yeah?
3 weeks, not 4 weeks.
3 weeks, yeah, okay. Well, today is the 4th week, okay. 3 weeks, yeah. True.
Anyway, Tony, the last week there was important for American dollar, which showed a certain rally. And how would you comment that? Will it go on or stop, or what to expect?
Right. So something that we mentioned. Okay, correct me if I'm wrong. I think it was 2 weeks ago that we mentioned the economic calendar. So let's have a look at it here again. So basically. What we actually did have, let's go on previous week, what we actually had on, come on, go up, on Friday. And if you guys do remember, I said it was one of the key things that we would actually see during the last week. So what we actually did have, what was it? There we go, keep going. So a few things. Yeah, we had the unemployment rate, blah blah blah, in Canada, but that's not something that most of you guys would be actually focusing on. But what we actually did focus on, and something that I mentioned on last Monday, so 4 days before the news came out, we're talking about the non-farm payrolls and the unemployment rate of the US. So these two news, they're basically the key ones. Determining how it's basically a really good measure of how the economy is doing, how the employment within the country is doing, and obviously it has a lot to do with production. That's one of the factors which the Fed actually take into account, once they decide to raise or to lower, or to keep the interest rate the same. So basically, what we saw is we did actually see something which surprised a few investors. But basically, what we had was a forecast of 160,000 increase in non-farm payrolls, but we only actually saw 134,000. Now, for any of you guys who actually follow this, you would actually know that we did not actually see, let's put it this way, what was basically expected of the news to happen. We didn't see any, major, massive candlesticks, going, the other direction against the dollar. And one of the reasons here is, the unemployment rate itself. It actually increased a little bit. That's one of the things, and also something that's worth mentioning, and something you guys actually had to sort of follow a little bit closer. With the non-farm payrolls, they actually revised. So that was basically for the last month, and then they basically revised the August figure. I think it's about 60 or 70,000, which is actually quite a lot. And that's actually one of the reasons we didn't actually see an increase in the most recent stats. Overall, talking about the dollar and the US economy, something I mentioned last week, the US economy is actually really, really, really strong right now, okay, at the moment. And that's actually one of the reasons that we do see, a picture like that on so some of the currencies, like the British pound and dollar that we traded last week, the euro dollar that we traded last week, and all of the majors. But yeah, that's basically in terms of the importance of the last week, the importance of the the news, the economic calendar, and something that I keep mentioning every single time, I believe. In terms of this week, we do have quite a bit of news again. That's something that I will leave for you guys, to go ahead and look at. But we do have a couple of key figures this week. We do have CPI. Again, it's one of the you know, one of the key measures of inflation. You know, that's something that you know, investors and traders, they do look closely at every single month in terms of the U.S. economy. Now we do have a couple of you know, heads of the banks. I do believe Mark Carney is actually speaking this week. Might be wrong actually. But anyway, we do have quite a bit of news, so that's something for you guys to follow. Okay, you know, throughout this marathon, you guys actually managed to have a look how it actually works. You know, you managed to see that it's actually, you know, quite important. It does have, you know, quite a big move on the markets, you know, every now and then, and it's very easy to use. Okay, you just have the forecast, you have the actual results, and that's how you roll with it. So yeah.
Okay, thank you, Tony, for sharing your opinion about dollar. And next question about gold. Now it's at its key levels, and it can break out either up or down, and it will.
True.
Which strategy would you advise in this situation, as nobody can predict that?
Yeah, well, that's right. So I mean, again, something that we did last week and, you know, a week before, something I'm gonna do now again. If we do have a look at the, you know, the resistance and support levels, let me just make it some different color so you guys can distinguish it from the prices, from the ask and bid lines. So if we do have a look at the support and resistance levels, so that's something that, you know, we can see. So that's basically, you know, sort of the you know, very rough image of it. But looking at the daily chart, so that this is what we witness. We actually did hit the top of it just today when the market opened, and that's one of the reasons that, you know, gold is actually going down a little bit today. But again, in terms of, you know, the long-term trend, it's really hard to say. You know, no one's really going to give you, you know, sort of a projection, you know, for a year, like half a year. But in terms of gold, so one of the things to understand, you know, gold is sort of a mirror thing to the US dollar. So most of you guys would probably hear that quite often, you know. It's basically a safe haven for, you know, a lot of investors. If they're not really too confident about the US dollar, then, you know, they might go long with gold, they might roll with that. So one of the things that we do notice here is, you know, it's been relatively, I really don't like this word stable, but you know, it's been relatively flat here. Okay, I mean, we do actually have, you know, quite a bit of a range, and that's one of the reasons, you know, it does actually allow us to trade, you know, intraday, or, you know, for some of you maybe a little bit longer. In terms of gold, so, you know, one of the things I would say, again, gold is something that, you know, most of the investors, they would every now and then they would go back to, you know, they would review gold, they would go back to, you know, trade on gold, they would you know, consider gold to be part of their portfolio. So it's always a good idea to, you know, keep an eye out for gold. So in terms of, you know, bit of a short term, so one of the things I could suggest, if we do have a look here, then we're obviously at you know, one of the key levels. It's obviously one of the support levels that we see right now. If we do break through, then we're most likely to go back to, you know, 1180 or like 1181. You know, if it does bounce back up, they're most likely, you know, to hit 1206 again. So one of the things we can do is, obviously, you know, we can think that, you know, it's most likely, you know, to bounce back up, you know, just go ahead and, you know, go long right now. And again, you know, what we could also do is place our pending order to sell. So that's a sell stop for those of you who's, you know, still quite unsure about it. We can place our sell stop behind this level, so in case it does actually break through, then, you know, it's most likely to hit this next support level, and that's exactly what we'll be looking at. So in terms of that, we're at one of the key levels right now, so I'm not really going to comment too much any further, at least, on gold. It can go either way, that's true. So in terms of that, considering that the U.S. economy is, quite strong right now, I am thinking that, we're actually going to hit this support level. Maybe not today, but, within a couple of days' time. And then after that, we'll probably, probably retract back. So it might be in this sort of flat situation for, quite a while. But actually, yeah, why not? Let's put it this way. So here's our support level. So let's actually go long. And I'm gonna place a bit of a take profit around this level. And just in case it does actually break through this level and it's gonna go down there, what I'm gonna do is I'm gonna, same thing as you guys probably know by now. I do actually enjoy using pending orders quite a bit. So what I would do is about this level, 9.0, and I'll take profit. Let's do about 85, I guess. So what you guys do see here is actually increased the volume, increased it by one more. So basically, what's going to happen if gold actually does go down, and I have a long position as we opened just now, which is actually it's in the green just now. But basically, if our gold long position actually does go down, what we'll have a sell stop open double the amount of the original transaction, of the original order, and we'll still make a bit of a profit here. And then after that, we're most likely to see the reversal. And if not, again, something I mention every single week, it's something you guys have to watch, okay? It's not like, you open a deal and, just leave it for a week hoping, it should be all fine. So again, that's basically my projection, okay? Let's not go any further, otherwise, I'll just, keep repeating myself and analyzing the market.
Okay, Tony, at the beginning of the conversation you mentioned Bitcoin, which is already for a long time in flat, and which means it is not volatile at all. And is it good or bad for the market, and how can we use it for our trade? Or shall we not trade in this case, or what shall we?
Okay, Bitcoin. Cool. So in terms of Bitcoin, something I probably was a bit impatient, as I mentioned, in terms of Bitcoin, because we could have just left it, could have, had a bit of a profit with Bitcoin position from last week. So I still strongly believe that, Bitcoin, the whole cryptocurrency market, it is going to boom in the future. And I don't mean future, like 2020 or, like 2049, something like that. I do mean, fairly soon. One of the things to mention, for those of you guys, who know what, know or at least have an idea of what consolidation means. So that's basically, market gathers, let's put it this way, market gathers its sort of powers, okay? So that's one of the things that we actually do see in terms of Bitcoin right now, and actually let's make it this way so it's a little more clear for you guys. So one of the things I would mention, it's been relatively flat, okay. Which for some of you might actually seem as a bad thing because we couldn't really trade too much in it. We couldn't trade every single day and make huge profit. But again, one of the things to understand, sort of this range area shows again and again and again. Every time Bitcoin sort of goes down a little bit, it's a good position to buy. That's actually one of the things that we do see constantly. Yes, we do have this sort of resistance level, which does sort of keep Bitcoin from breaking through and skyrocketing again to like 20-something thousand, or $100,000 US that some analysts predicted. But one of the things to understand, it basically shows that the market is sort of consolidating its powers. I don't really like to use that word, but anyway, the market is consolidating at around this sort of area from like 7,000, like about 200, and 7,000, like 800 or like 500. Which means that it does not seem to be fallen further. Okay, which is obviously a good sign. If that's a really strong support level, then the only direction it can go is actually go back up. So that's something I'm actually looking out for. That's one of the things I do suggest to to most of my clients, to the investors. I do suggest, if you guys do have Bitcoin, do not sell it. That's one of the things. Yeah, I mean that's true. It's one of the things that a lot of sort of impatient investors do. They would buy a lot of Bitcoin or some other cryptocurrency, and if they don't see huge profit shortly, they're tempted to sell it. That's not how you do it. If you actually do see a dip, again, if you can obviously afford it, I would actually buy a little more.
Be patient.
Exactly, and it's not something in terms of averaging that we mentioned a few times. That's a good position to buy, not to sell it. And that's one of the psychological mistakes that most of the beginners do. So in terms of Bitcoin, from this level, I would actually that's probably the first time I would actually suggest to sell it, just because we do see sort of quite clear, well, at least on the hourly chart and 4-hour chart, we do see sort of a bit of a resistance level here, so it might be a good idea to actually sell it, but long term I'm still gonna go long and buy it. That's the idea. But yeah, I'm just gonna leave it like that.
It just depends on your patience. Are you ready to wait a bit longer?
That's all. Yeah, and as you guys can see, I closed the position with a loss. I could have waited and made a profit, but that's how it works. Yeah.
Yeah, Tonya, it is widely considered that big profits suppose big risks. Is that true? And what is the accepted ratio, I should say, of risk and profit?
Okay. Right. So in terms of the risk and return, it's actually a common thing to hear, and one of the reasons it has to do with the sort of let's put it this way, like real world businesses and investment. If we talk about sort of the cost of the money, generally speaking, if we sort of refer to banking industry, what a lot of say like banks or financial institutions do tend to give to their customers, to the investors, well, to the people who look to get investment from like a bank, say, they do tend to ask for a high return if they do see some sort of risks. And that's all. That's obviously the case here a little bit as well, not in the classical sense. So let me elaborate a little bit. So if you guys are looking to make a huge profit in a short period of time, you have two ways: either to trade more frequently, but keep the risks sort of fixed, or to actually increase the volume. And that's obviously where all the risk comes from. So like Alice mentioned, so if we do decide to go with a bigger volume, and that's something that I did with this one, for example, with gold. You guys need to understand, first, I would only recommend it to a little more experienced traders. And also, you still need to remember, it's not a casino. It's not like a poker game. You guys don't just say all in and just use all of your free margin to actually go into certain deal. That's obviously the one thing. The other one that I mention every single time, you probably know this one by now. I mention every single time, guys, use stop losses, use pending orders to hedge yourself, okay? I do it, right?
That's true.
Yeah.
That's true, and you should, because I know that many people listen to that and say yes, yes, and never do that. Because they are afraid to lose, because it doesn't seem prudent and it doesn't seem of common sense that I buy and then I sell cheaper. But you save yourself of losing more, and you can rebuy cheaper actually. So it's
rebuy, not a stake. But rebuy is, buy it again. Anyway, so yeah, I mean that's true. It's one of the things. I know most of you guys would, probably, listen to this and say, okay, I will use, stop loss, or I will, hedge myself with a pending order. Actually, do it. It's not a bad practice. I say especially, the more experienced users, they might tend to, not use it thinking, I can see the levels, I can see the market, but again, with some of the news that we do see happening every now and then, regardless of the instrument you guys are trading on, we do, tend to see some breaking news that, might sweep your position. So in terms of the ratios, I'm not going to go too much into it. It's something, it's really dependent on instrument. B, the deposit that you guys do have, the actual loss, not the ratio, obviously. It does depend a lot on how risk averse you guys are. So it's more of a personal thing. I wouldn't say it's more of a preference, but there are some rules that you guys can follow. Some say that the margin that you're using should not be higher than 10. Some say more than 20% of the whole deposit that you guys do have. And the rule of thumb that a lot of traders use, not more than 3% of your deposit should be risked. So that's how they place their stop losses, or that's basically how they close the positions with a loss. It's something that you guys have to sort of work on and work out for yourself, because it does sort of depend on a lot of factors. But it's obviously a really, really good idea to keep in mind that if you want to make more profit, I would say trade more frequently. At the same time, keeping in mind that you should only open a certain order if you have confidence in it. There is an old saying: if you want to trade something, do not trade anything. Okay. And one of the reasons, if your hands are itchy to grab a mouse and just click something, open absolutely anything as long as you do trade on this day, that's a bad sign. That's more of gambling now. But if you do, sort of see different positions on different, instruments, I'd rather, have 10 orders which, all give me, say, $10 each, instead of, hoping for this one particular deal to go absolutely right and get me $100. So yeah.
Well, Tony, we discussed Bitcoin and dollar and gold. Maybe you would recommend some other instruments to trade at the moment at the market.
Sure.
Which are they?
Anything. So we can scroll through the whole thing. And I'm actually serious. It's, in terms of, cryptocurrency, for example, if we do have a look at the Bitcoin, we can compare it to, say, Ethereum. You guys see it's quite similar? I wouldn't say it's the same, but it's obviously quite similar. Even with this, sort of bit of a jump, it's quite similar. So there are tons and tons and tons of different instruments you guys can trade on. Same thing. Let's have a look at EURUSD. So that's the EURUSD, and this is British pound. They're not like completely, they're not completely the same, but basically there are different instruments you guys can trade on. Absolutely anything would actually, go. There are tons of cryptocurrencies you guys can, go ahead with. In terms of, the fiat, again, that's something you guys can choose. Again, I know some traders actually go ahead and choose, something which is, a little more closer to their, say, culture. Some really like Japan. They go with Japanese dollar. But that's one of the things actually to mention just now. So if you guys have a look at this massive candlestick, and we did not, let's have a look. So today is a health and sports day in Japan, and one of the things we would actually think about in the beginning of the day is, the Japanese yen would actually sink a little bit, but we actually saw this bit of a gain, in price. So one of the things I would actually suggest is looking at it today. Japanese yen, yeah, sounds good for you?
Maybe. And do you remember we opened some positions on Apple shares? What about them?
Apple, we didn't actually, again, I didn't really open anything, but that's something I did suggest. So yes, same thing as we did last week. We actually did see, this move in Apple. And again, if you guys do remember, I said, every time a strong company like that, every time we see, a retraction like this, like market correction, we would actually, see it go back up again. So there, like I mentioned, there are plenty of different instruments. Unfortunately, we do, by the time we were making this video, the stocks and shares market, the New York Stock Exchange is actually closed. It's not operational just yet, so we can't actually show you, how it would actually happen, how much we would gain in terms of that. But you guys can probably just imagine. But in terms of that, that's something that we do see. Well, I'm not going to say every day, but quite often. And if we, there we go. Let me make it this way. If we do have a look at this one, some of you guys, might argue that's not really a trend channel. But however, what we do see, let's look at the bottom portion of it. What we do see is a very, very good support level, and guys, it just bounced off. Like if you look at it, it's like it's crystal clear. And it's actually bounced off this level, and it's most likely, you can do something like that, but eventually we're still going to...
Eventually it's an uptrend.
Exactly. In terms of that, last week we mentioned Facebook, and it's something I didn't really say, whether we should, go ahead and trade on it, but something that I did mention, they did have a problem with their security, a lot of accounts got hacked, etc., etc. So that's one of the reasons, we saw the dip in the price of, Facebook shares. But again, that's a really good idea to look at Facebook closely this week, because we might actually see a really good position to buy it, especially that we're sort of, I'm not going to say at it just now, but we're really close. If you guys have a look, say about this level, we're quite close to the historic levels. Not the historic levels, but key levels. So something worth mentioning again. In terms of, we mentioned gold already. So in terms of that, I mean, there are plenty of instruments. Japanese yen. We're most likely to see this reversal, especially that the U.S. economy, like I mentioned, is sort of booming again, and we are actually at one of the support levels just now. So most likely to see yen go back in price. So I'm actually going to go ahead with yen and go along.
Good idea, I think.
Well, we'll see. We'll see. Actually, yeah.
We are not afraid of going it down because we had stop loss.
I didn't actually place it, but yeah. Just for the sake of doing it, like I mentioned to you guys every single time, you should do it, and I'm gonna show you how I do it. There we go. Placed it. By the way, in terms of the ratio, one of the things to sort of would like to add on. If we talk about take profit and stop loss, one of the things I do see with a lot of beginners, they do tend to place their stop losses like here, like very, very close to where they opened the order initially. And it's one of the biggest mistakes you guys can actually do. One of the reasons for that, the smaller your stop loss is, the more likely that it's actually going to be closed with a loss. The reason for that, you don't actually give the market an opportunity to go into the plus. You don't actually give an opportunity for the order they opened, to make to make a gain, to make profits for you. If you are going to close it manually, or if you're going to close it with a stop loss too early. So do not be afraid. It's again something that we talked about previously, something that you guys have to work out in your trading strategy and psychology, basically. So yeah.
Okay, and Tony, let's sum up. And what are the obvious and the main pluses of work with crypto broker? I mean, the difference from ordinary stock exchange, not stock exchange.
Crypto exchange?
Yeah.
Okay.
Any exchange, anyway.
Any exchange.
Yeah.
Okay, that's a good question. I know you guys actually ask that a lot. I do see it, every now and then in different social media the accounts that we do have. That's one of the questions that we do get asked a lot. So let's put it this way. We give you an ability to absolutely trade in pretty much anything you guys would like to. Okay, that's very, very shortly. What I do mean, we are the first crypto broker, retail crypto broker, and the idea behind what we actually do is to give you guys an ability to have your deposit in cryptocurrency, but to trade on absolutely anything you guys would like to. You go with fiat, that's us. You guys can go with stocks and shares. You guys can go with commodities, as you can see, different indices. All sorts of different things. For some of you, it might not seem like a very big thing, but if you guys do decide not to only trade in crypto itself, you can go with crypto exchanges in that sense. But if you guys do decide to have a bit of your portfolio, say in crypto, a bit of your portfolio in fiat, a little bit in I don't know, let's say gold and some shares, you would actually have to open different accounts with different brokerages. You would actually have to sort of follow that. You would have to calculate what sort of margins you guys are using on different accounts, how sort of to manage your portfolio in terms of actually having different accounts, different sort of baskets. Now, in terms of that, it's a lot more convenient, obviously, for all of you. It's a lot more convenient for myself as well, to actually have one account and just choose how I would like, to sort of use my resources there, use my funds. If I decide to, quit a certain deal, say on, I don't know, gold, for example, what we have open just now, I can just manually close it real quick and, go long or, go short with, I don't know, Bitcoin, crypto, generally speaking, fiat, etc., etc. So the main difference, you guys are actually able to choose the market you want to work on. There are plenty of different instruments to choose from, like I mentioned, just have a look, there's a whole list. And we will be adding a lot more. That's something that we do. We constantly evolve. We obviously look at the customer side of it. So anything you guys would like, I'm sure we'll have it shortly. So yeah.
Okay. Thank you very much, Tony. And unfortunately, time is over. Thank you all very much for being with us today, and see you soon.
Okay. Bye bye.